why our strategy's changed a little bit when it comes to fixed income, and over the past 12 months we've started using the Macquarie Income Opportunities Fund, and it has a bit to do with what's been going on in the term deposit and hybrid market that we've normally used to get your fixed income exposure. And so you can see from this graph, so this is a period from August last year to October now, and so I used August because that's the last date that the RBA changed their cash rate. So basically over that whole period the cash rate has been at 2.5% unchanged, but you can see obviously term deposit rates have been coming down quite significantly, and this is sort of the average 5-year term deposit rate of the main banks we use. But shorter dated term deposits are even lower, they're getting down to 3.5%, as you'd all be aware. And so term deposits were starting to not really look great value. But at the same time, the hybrids that we used were getting pretty expensive towards sort of May, June this year. And so this is just a price chart on this side of where some of the hybrids were going. And so also at this point, this is when quite a few of the hybrids that we were invested in were maturing, ANZ, PB and WBC, PB. So there was a whole heap of money coming back, and we had to find somewhere to put it. And term deposit rates weren't looking great value, and hybrids weren't really looking in less good value. And so we had to look for sort of an alternative, and really the main alternative then is to actually start looking in the managed fund space. And the reason we went into the Macquarie one was really because it was sort of the lowest risk floating rate bond fund that we could find, and so that's what we really wanted to do. It was sort of the starting point to go into this sort of managed fund space, is look for something that was pretty low risk and wasn't going to sort of cause any surprises. And so you can see that it has had pretty low volatility over that whole period, which is what we wanted out of it. And the other thing it does, it just gives us another sort of tool to use when looking how to invest your money. And so you're going to get this happening in the future, and so there's going to be times where we don't want to invest in the hybrids because they're too expensive, but there's going to be other times. So the hybrids actually fell when the equity market fell, and so at this point they were looking much better value. And so you can see the amount that we put into the Macquarie fund at that time was probably almost zero, because we were getting you could get much better yields in the hybrids than you could have a month before that. And so it just gives us another sort of vehicle on which to give you recommendations on your fixed income exposure. So that's really sort of the background, and I'll hand over to Alex now.